It's not complicated. It really isn't. I'm someone who's neck deep in capital markets. I've seen over 100 billion riba structures, bonds, Sukuk. I'm neck deep. I can spot it a mile away. You can have the tools are completely out there for a sincere system. It's the narrative, the disclosure, the communication. That's the problem, and that doesn't suit the most of the stakeholders in the existing market. What you should be doing is devoting 10%, 20% of all the money that you make as a bank or as a financial system stakeholder and supporting structures, initiatives, incubators, platforms that offer the alternative with the full disclosure.
Hello, everyone, and welcome back to another episode of Majlis Markets. Before we begin this podcast, remember to like, share, and subscribe, and also leave us a rating wherever you're listening or watching this podcast. But now I'd like to introduce or reintroduce my guest, the first guest for 2026, Khalid Howladar. Khalid, assalamu alaikum.
Wa alaikum salam, and thanks for the invitation.
And a happy new year to you, and I wish you all the best for 2026, inshallah, going forward. Khalid, it's really great catching up with you, this time on video. Our last interview was back in May 2024. A lot has changed since then in the Islamic finance world, in the world in general. We're recording this today just after a crazy weekend of events that's happened with Venezuela. But Khalid, since our last podcast, what have you been up to since we last spoke?
Look, my world is kind of split into two. On the advisory side, my ratings advisory business, I work with a lot of supranationals, sovereigns, and some corporates on their ratings, on their ratings narrative, on their story, for example. And unexpectedly, post-COVID, development finance, development institutions have become quite a big part of my portfolio, which is fantastic because not that I don't like working with real estate companies and so on, but development institutions are agents of change, institutional agents of change at the highest level. They have a mission, development, impact. And that's something, alhamdulillah, synchronizes with my own personal ideology. So the fact that my core credit advisory business synchronizes with my more sort of impact, social, humanity-oriented goals is fantastic. And then on the other side, I've just literally December the 31st made, I think, my 21st angel investment. So I've been very active on the angel scene. All of that's been in the last sort of 8 years. The first investment I did was a halal ready-to-eat meals company. So halal food, nothing to do with tech, trying to diversify out of finance. I'm too over-concentrated in tech and finance. And the last one I did was actually in gaming SaaS infrastructure. But overall, my portfolio is oriented towards some form of innovation, impact. Islamic fintech was initially, but now it's more AI, Web3, blockchain, digital assets. As I've kind of given up on the established Islamic finance sector as a source of change for more impact, more Ummah-driven, more change-oriented types of investment and financing. And I think the hope for change is more of a grassroots, bottom-up, using fintech, DeFi, Web3 to bring about a more investment-oriented culture rather than deposit and banks. And also, AI, extraordinary challenges and opportunities ahead. I feel like we lag real estate, and gold. Alhamdulillah, gold and silver are roaring right now, and that's actually a significant part of my portfolio. But Ummah as venture capitalists, Ummah as supporters of innovation, tech is not a common theme. And if you look about a lot of the other things that have happened in the world, the Ummah does need its own, I would say, platforms, tools, rails, unity, not division. These are all under attack. And in a lot of the places, the Ummah seems to be on the front line of some of these narratives.
So we'll definitely get into some of the stuff that you mentioned, and yeah, like you said, a lot has changed. And personally, on like an anecdotal level, I don't think it's been that great the last couple of years, not just for the Ummah but for humanity in general, if we want to put it like that. But we're in 2026. I recently interviewed Harris Irfan on the podcast, and I told him, look, I want a bit of positivity with the Islamic finance industry. I know you and him have LinkedIn in back and forth, and also on X as well, on Twitter and other social media platforms. But I said to him, I started off with him by kicking off with him, and maybe I'll do the same with you. Is that we're in 2026, the industry seems to, according to all reports and research, seems to be growing again. It's something in the range of 5 or 6 trillion collectively. It's on course to reach 8 or 9 trillion within the next couple of years. Islamic finance is being adopted by a lot of new countries, such as Uzbekistan, some African countries as well. There's talk of Brazil as well, also introducing some kind of Islamic finance framework to unlock Islamic money from the Gulf or from Malaysia. But what are your feelings on if we want to focus just on the traditional Islamic finance industry to begin with? What do you think about the industry right now?
Look, you put me in a sticky spot. Look, I've always seen that 5 trillion. I've always seen the sector as a foundation. It's a brilliant foundation. Alhamdulillah, it's an achievement what the stakeholders in that space have built and what they've achieved in what is a very non-Islamic finance friendly environment. And so credit to all those agents and stakeholders that have delivered that. However, I just feel it's stagnated. When I first became global head of Islamic at Moody's, it's now almost 20 years, right? 2006 is when I started. 2005 is when I started covering Islamic finance. And honestly, I just don't think much has changed except the numbers have got bigger. So if size is your only metric for success, alhamdulillah, good on you. If niyyah, purpose, intention, action, consequence, change to bring humanity, not just Muslims, into a more fairer, a more inclusive system is your goal, it's a bit of a miss from my perspective. So I feel it's a wasted opportunity from that very strong and lucrative foundation. And when we were analyzing banks at Moody's, there were 60 banks in my portfolio. What's interesting, the Islamic banks were initially some of the worst performing because of their heavy real estate sort of concentrations, which blew up a lot of banks. But then once those problems worked out, they become some of the most profitable because really consumer centric, lots of technology oriented solutions, especially in the GCC and UAE, some really sort of customer centric stuff. So you saw the growth, but when you operate in a fiat riba system, I think you're kind of blinkered as the opportunities are to keep making money where you've made money. And if there are opportunities for change or a difference, I think they're neglected. And I really feel that the Islamic banks should all be contributing into tech funds and innovation funds and incubation funds. They should be the catalysts for a new frontier of Islamic finance. But apart from growth, numbers, and it doesn't seem to be much interest in a more Islamic moral economy, I think Professor Mehmet from Durham called it, or just the sincere Islamic economy. I don't think the change or material change is going to come from within that sector. So I know I didn't answer your question with it's a positive in terms of growth, but not really in terms of intention, I think.
Yeah, no, I kind of agree with you. It's like, despite all the growth in traditional banking assets, and Sukuk issuance, I know Sukuk issuance, we'll get on to Sukuk in a minute, but, it's hit over 1 trillion, I think, according to some research of outstanding Sukuk. And, new countries every day are issuing Sukuk or looking to issue Sukuk and try and attract Islamic funds money from, say, the Gulf or Malaysia or elsewhere with Sharia mandates. But do you think that Islamic finance, you've talked a lot about the moral economy and, the work that Mehmet and Habib Ahmed have done in Durham and others as well. Do you think there's like a reputational problem among Muslim consumers and maybe even generally across the board with Islamic finance or the way Islamic finance is being done today?
You know what? There's a very interesting anecdote, which I think for me summarizes a bit of the disingenuous of the product offerings that, in my view, replicate the financial outcomes of the existing fiat riba system. I was actually taking an Uber up to Cambridge. I've been invited to speak at that Cambridge Islamic finance program. I'm not sure they were ready for my brand of openness and transparency because I never got invited back. But in the Uber, the guy asked me, "You're going to Cambridge? Are you a student or a teacher?" And I said, I'm going up to teach. And he said, "Oh, mashallah, mashallah, what are you teaching?" And I said, "It's about Islamic finance." And I was completely unprepared for the response I got. And Uber drivers nowadays can be medical doctors. You shouldn't make a presumption on their background. But he goes, "It's all bleep, bleep," right? And I'm like, I practically fell off my proverbial chair. I'm like, what do you mean? He said, look, any person can see it. It's the same as a regular bank. It's just that they charge you more. And I didn't really I didn't try and defend it. I just said, look, there are differences, but you're right. In terms of the financial outcomes, it does pretty much the same thing. And I just sort of sat quietly in the back of the car for the next 20 minutes because this guy just thought I was a teacher of something that he didn't value. And I think this is where consumer sophistication comes in. I think in the UK, you probably have a bit more of a sophisticated consumer. Maybe in other markets, they're happy to defer. If I'm told it's compliant, I don't need to look any further. I don't need to question that kind of blind sort of acceptance as opposed to questioning. And a lot of the commentary I see is debate versus consensus, diversity versus unity, transparency versus opacity. I've had the privilege in the 20 years of meeting many scholars of different stripes, of different ages, of different seniorities. And there's actually more of a diversity of views that you might suspect. But the Islamic finance sector is the dominant one, and it's the one that ultimately holds a lot of the value. And so the narratives within the Islamic finance sector around compliance tend to dominate, whereas the other sort of minority views, I think, don't really get their time in the sun. And so I don't think really there's much of an open debate around these. But you do have them in more sort of discrete settings, scholars who are not happy with how things are, but it's the way it is, basically.
That segues quite nicely into the next segment I want to talk about today. I know you and I have talked about this, and you and Harris have talked about this, and others as well, is AAOIFI Sharia Standard 62, which has been written about a lot, and it's got a lot of media publicity. I think the latest right now, Bloomberg reported that it's going to be put on hold or indefinite. Basically, they're not going to implement it right now. Maybe take more feedback from the market and see where it is, because right now it's in what's called exposure draft, which is just basically a preliminary. But I know that the Central Bank of the UAE, which uses AAOIFI as a reference, as law for its Islamic financial institutions, unlike other jurisdictions, I think it's the only jurisdiction, even in Bahrain, they don't fully enforce AAOIFI on all of their Islamic financial business. From what I understand is that some of it's come out and some of it's coming into the activity. But what do you think about what the latest news is? Are you surprised that it hasn't gone through? Are you not surprised? What do you feel?
Yeah, so look, it's interesting. The mainstream media, FT, Bloomberg, it seems like whatever pops up in my post turns up in their news articles. I've written extensively on this. I'm old enough to be around since the beginning of the Sukuk markets going mainstream, and old enough to remember the pronouncement by the great Sheikh Taqi Usmani, someone who I've never met, but who I celebrate quite a lot, because he spoke his mind about things that were obvious to anyone with an objective viewpoint about the market, a non-conflicted one. And his criticism of the Sukuk market got buried in the sort of 2008 effectively financial crisis and so on. And it's like that attempt to improve the market, I saw Standard 62 as a revival of what was AAOIFI had tried to do previously under Sheikh Taqi's guidance. And I was kind of a little bit optimistic that the fact that it come back was eye-opening for me. I respect a lot AAOIFI, and because I perceive them to be relatively impartial and objective, relevant to other parties in the market, relevant to other stakeholders. And I've been a part of a couple of working groups, and I know the niyyah is sincere and the intention is sincere. So I back AAOIFI with all my heart, let's say. But my mind understands the nature of capital markets. I've been working in capital markets for approaching 3 decades now, and the market is a very powerful force. And the people that matter in the markets are the people with the money, and the people with the money, the investors, are not demanding asset-backed Sukuk. And if you're not sort of corralling them or educating them as to, one, what do they actually want? Do they really want sincere, more niyyah-oriented structures? Or do they want just a label that lets them invest in fixed income with peace? I think that's the starting point. to find out what the market wants, do some surveys amongst institutional investors and so on. Sorry, amongst Sharia, genuinely Sharia sensitive. And if they want it, then it comes down to a disclosure issue. I don't think forcing the market ever works in anything, really. Product market fit is something I pull from my venture world. And all you can do is provide very clear transparency about what's being invested in and then let the investor choose. You can't force them. And I think institutions like AAOIFI and regulators should be mandating transparency and disclosure rather than trying to necessarily force structures. So if 90% of the market do not care about sincere asset finance, is it your job to change their minds as a regulator? I think a regulator's kind of market transparency, orderly conduct, regulating for an orderly market. I think that's maybe where the scholars maybe have more of a role. I do see them as wardens and stewards of where as an ummah we should be going. And they have the respect and the following of the community. So is the regulator the right place to start a movement, or is it the scholars, or is it the consumers and the customers? I feel like it's one of the last two, not the first one. And if the investors don't want it and the scholars don't want it, well, what's the regulator up to? So I hope he's coming from a good place, but I think you need to look at the realities of how markets work and who has influence and who wants change.
One of the things that was interesting, whilst I was at the AOIFI conference in Bahrain, FT was running a event with the Islamic Development Bank, and the Islamic Development Bank president was in London at the time, and he was quoted, or misquoted, I should rather say, said, I think FT journalist basically asked him, what do you think about Standard 62? What would this mean for the Sukuk market? And I think what he said, or what was taken as that this will never get implemented. But in fact, what he actually said was, in the current draft, it won't be implemented. Which obviously, again, journalism loves these mainstream journalists love sensationalism. I can attest to that. But if the main stakeholders, such as the Islamic Development Bank president or others, I've spoken to other people at Islamic banks, and when I mention Standard 62 to them, there's two views. They'll say, okay, we understand from a religious perspective this is a better way to go down. But then you talk to other people and this is just another barrier for us. I don't know if I can share this on this platform, but you were in London in the summer, and there was a presentation being given by a gentleman at SOAS at the annual Islamic Finance Summer School, Islamic Finance Summer Lecture. And everyone was looking at you when everyone was talking about the Sukuk market and talking about rating agencies. And I think you said something, maybe I'm misquoting you, hopefully you can quote me properly, but quote it properly. But you said something along the lines of this doesn't matter unless you put money on the table or something like that. All of this is just, utopian talk.
Look,
what do you think?
We're all window shoppers. It's just and honestly, I've given up going to Islamic finance events because nothing changes. It's only in the crypto space and DeFi and Web3 that there are some new conversations going on that are at least a bit more of a debate. Yeah, look, unless you're putting money on the table, your opinion in a market, you're just an armchair spectator, right? So it's frustrating. It's frustrating to me that, so much intensity and debate goes into this. And I don't think in the room there was one investor. So who are we talking to exactly? It's intellectual, it's just intellectual theory, discourse, but doesn't achieve much. And as a practical person, as a person who sees the state of the world and the way where it's going, and a lot of it is linked to financial systems, yeah, enough talk. We need actions. If you want to fight inequality in the UK, if you want to fight poverty in the UK, if you want to prevent exploitation and so on, if you want to stop. And again, in the UK, I focus on the UK, obviously, because I'm born there and I had a very benevolent upbringing. The racial tension that you see there is a manifestation of inequality, and that's a manifestation of the financial system. So, it's almost inevitable, and to be not tackling those questions and just to continue blinkered. Something that you said just now, from a religious perspective, we understand. That's the whole purpose of Islamic finance. If it's not religious, then step away. This co-option of what is meant to be an ethical, nia-driven, intentional-driven, values-driven system into a fiat riba system. If it's not driven by, stay in the other system. Don't contaminate or damage the nia of the Islamic system. An Islamic system, I'm pretty sure, isn't religion meant to come first as the driver, and then how you implement it is possible. And look, it's not complicated. It really isn't. I'm someone who's neck deep in capital markets. I've seen over 100 billion riba structures, bonds, Sukuk, I'm neck deep. I can spot it a mile away. You can have, the tools are completely out there for a sincere system. It's the narrative, the disclosure, the communication. That's the problem. And that doesn't suit most of the stakeholders in the existing market, unsurprisingly.
What do you like? I asked Harris this, and I'll ask you this as well. Is that I know a lawyer who's based out in the UAE, but he does both conventional and Islamic transaction. I mentioned Standard 62, and he agrees with us and with other people about the religious angle. But what he said to me was like, look, we need to build critical mass. You need to have influential people, champions in high places in order to facilitate change. Once we're in critical mass, then we can implement change and be more aligned to the maqasid or be aligned to more religious principles. Do you agree with that, or do you think it's time now that we should just,
What's critical mass? Isn't 5 trillion critical mass? Isn't 1 trillion Sukuk market critical mass? What's got to be 10 trillion, 20 trillion? Islamic finance has, as of when I was global head at Moody's, it had critical mass. I think back then it was 2.5 trillion, 3 trillion. It's got critical mass for a conversation. And I'm not saying, look, I'm a pragmatist. You cannot upend the financial system and replace it with a new one. What you should be doing is devoting 10%, 20% of all the money that you make as a bank or as a financial system stakeholder and supporting structures, initiatives, incubators, platforms that offer the alternative with the full disclosure. And if you get 1 billion people doing venture investing or asset financing or using gold or et cetera, that will change the system, but you're not even giving them the chance or the disclosure or the transparency to vote with their nia. When you hide behind, and it's probably an inflammatory word, legal complexity and structures and opacity and all the rest of it, you're just muddying the waters. And I've seen commentary, but we're in a river system and so on. Look, why is it so easy to choose to buy halal food in an unhalal shopping market or on the UK? Because it's transparent, it's clear, it's objective, and there's no muddying the waters. I don't think Islamic finance has to be that complicated. I don't think a faith that was given to 1 million people, to 1 billion people, and even Christians and Jews also had the prohibitions on usury. I don't think it was made that complicated that you couldn't understand it with simplicity. And a lot of the complexity comes from disingenuousness, in my view.
Just off the back of that, don't you think at the end of the day, all of this is about protecting interests, right? Lawyers and bankers, they don't want to get their bonuses or get their deal flow getting impacted. If we just get to the crux of the matter, people don't want their interest being impacted, right?
I don't want to target a particular demographic. I've written a lot. I published papers, incentives, right? If you're someone who really cares about real guidance, look at the incentives of the people who are giving you the information. If they are objective, if they're perhaps an academic, or if they're working for an institution that doesn't profit handsomely from a particular market structure, well, then they're probably more independent than someone whose livelihood and wealth depends on someone who is involved in that. And that's all I'll say. That's an acid test you can apply to everybody in that space, but maybe you don't care. So you don't care who's giving you the information. If you do care, then we should empower those people who care with the disclosures and the transparency for them to make objective and fair decision. It's like, not to bring it to COVID, informed consent. That human right, I think I don't know which, is it United Nations, human right to informed consent and so on. And then there's a lot of disclosures sort of coming out and so on. I think with Islamic finance, there just has to be more transparency, but then it becomes challenging when you have a continuum of opinions. So you can probably find a scholar for every opinion under the sun. Is any one of them more legitimate than the other? That plurality of Islam is a strength and a weakness. Strength because you've got diversity of opinion. You should have diversity of thinking, new ideas, fresh ideas, but then a weakness because then from an action perspective, you need widespread consensus. And so then you can often move at the pace of the most conservative. And maybe that's the right thing, but if I look at the state of Islamic finance and the Ummah, where we are as a billion plus community, I'm not sure the existing system has served the community that well. So
Just sticking on Standard 62, do you think the better thing would have been to do here is to develop the ABS market within the region? Because it seems to be now that there are some ABS transactions, which are albeit conventional. You mentioned you've been in the market for a long time, and you were there when the Sukuk market first, in its like formal iteration, came out and was issuing. You know, there was deals done in 2008, I think, where there was on the same day an issuance came from an issuer issuing an asset-backed Sukuk and one from, I think, a corporate within the UAE, and everyone leaned towards the corporate because it was easy credit understanding. So I guess my question is, do you think it's probably better to develop this ABS kind of more sophisticated market where investors are comfortable with these kind of like levels of risk? Because at the end of the day, Standard 62 is about, really speaking, it's about legal title to ownership, right, and sharing risk and everything. So don't you think it's better probably to do something like that than, you know, try and force the issue?
I don't think it serves the purpose. So look, as you mentioned, I still actually had a bit of hair when I worked on Tamwheel, ABS Sukuk, Cayman Islands, #1, right? That I even remember the name of the issue, SPV. The other one was Sun Finance, Abu Dhabi, #1, the defunct real estate developer Aldar. Two genuine asset finance securitizations, financed with payments coming from cash flows. It's more of a hybrid. There may have been some still challengeable elements, but at least your asset performance was driven by a tangible asset quality. Those securitizations are typically complex, expensive. The jurisdiction back then, legal environment, was way more challenging. Now it's much easier, but I think it's sort of the tail wagging the dog here. Trying to build an asset-backed finance market based on securitization when people are not asking for it, just to satisfy some, Sharia compliance angle. It's not the right way to do things. If the starting point is what do investors want, what do Sharia sensitive investors want, split the Sharia sensitive community into those that are sincere and those that just need a label. Work out who they are and if they're material, serve that demographic, right? And if not enough people care, well, then that's not for a structured finance securitization banker or a lawyer to change how people feel about asset finance in Islam. I go back to the scholars. The scholars are the guides, the scholars are the stewards, they're our wardens. They are meant to take intellectual and moral leadership within this space, not regulators, bankers, etc. People like myself, you mentioned Harris, with our deep practical experience, we offer insights and knowledge that in some cases exceeds that of a scholar in a particular domain. And it's a collaboration of parties like them and us that delivers outcomes. But we're still not the moral guardians, right? We can point out observations, factual observations. We can put the questions up there for examination, but it's not for us to lead except by doing. And look, Harris and I, we actually see probably eye to eye on about 90% of stuff. We start to diverge on aspects of crypto, but even then, I think it's marginal. What he's doing with Cordoba is just by building profit participation notes. Inshallah, it will be a great success. And once his notes are out there, it creates a question. What are his Sukuk doing that yours are not? And that's the beginning of a transparent conversation. I've taken a different track where I think technology is the answer, and not just technology, sort of viral retail technology. And Bitcoin has shown that a retail viral technology can come from the bottom up all the way to the biggest institutions in the world. I was there in Washington 5 or 6 years ago. Larry Fink, what was it? He called it Bitcoin is an index of money laundering, right? That was his words in the Washington IIF. Jamie Dimon said it's, criminal, this, that, and the other. Both of those guys, both of their institutions are at the forefront of the push into digital assets. So they buried everybody else while they invested, and now they are ahead and monetizing, and they will be leaders in the digital asset space. So Bitcoin is proof to me, whether you agree with its hard money premise or not, it's proof that something viral, something technology driven can actually have bottom up retail traction that then changes institutions from within. it's that model that drives me to invest in startups, impact at that venture level, because amongst them are technologies that may be able to change things from the bottom up. So that's kind of how I'm trying to change things. The institutional side, that said, I am trying to convince my institutions to look at digital assets. They bring me in as the ratings guy, the credit guy, then it morphs into a strategy guy. And then the strategy guy, by the way, happens to know a lot about tech. So one of my development institutions, I'm looking at AI to amplify their throughput, improve their efficiency. Another sovereign looking at minerals tokenization, value chain capture. I think minerals, especially in the context of Africa, Saudi, and other jurisdictions, if you're moving back to a gold-backed hard money world or hard asset world, well, Africa and the Middle East probably have trillions of hard assets between them. They are very well placed to migrate to a more asset-oriented, which so happens to be a Sharia compliant system, without having to upset all the regular stakeholders.
You know, you mentioned about Larry Fink, Jamie Dimon, all these guys. And in tandem with that, also, you don't forget that Donald Trump, when he became president in 2025, he introduced a lot of legislation to help facilitate more friendly crypto policies from the US. And obviously with the meme coin launch and all that stuff. But I guess, do you think also that Muslim countries generally, I asked you this morning when we were just arranging this conversation. Like, Islamic countries, do they really want an Islamic economy? A lot of them love to say that they want an Islamic economy, but at the same time, they still have to be a global citizen in the sense that they have to go to globalist institutions like the IMF or the World Bank or whoever. One of the things I'm trying to get at is, like, if you want to have like this standard 62 asset backed proper risk sharing, you need to change the entire ecosystem of the economy, in the sense that you need to change laws. And I think one of the things that the bankers were telling me about Standard 62, what the challenge was, is that, for example, if you have structured Sukuk under Standard 62, it leads to things like stamp duty, so that leads to cost implications for the issuance of Sukuk, which is getting to the heart of the matter, right? So I guess, like, do we not need to change the legal, or not the legal, but like we need more political will from different countries and leaders?
Yeah, look, who are they going to take their Sharia guidance from? Other politicians, banks, or should it be the scholars, the higher Sharia board? So we come back to the same anchor point. If the supranational organizations, if the national boards are not taking that leap, then I don't see it happening. And then look, as a sovereign, you've got an extraordinary amount of fiscal, social pressures to manage. And for all of its sins, putting aside the compliance aspect, the fiat system does allow you to spend more than you have. And, I've gone around the houses between fiat, hard, fiat, etc., and how within a fiat system, how do you migrate? Well, simplistically, they should be printing money to invest in assets. At least then, orienting towards something physical instead of printing for consumption. So the question you're asking is, I don't think that NIA exists or is practical from a position of deficit. If you're a creditor country, if you're a liquid and wealthy country, then with the right Sharia guidance, you can afford to sort of go into those areas. The promise of fiat is so strong. The interesting thing is the Gulf is quite unique, right? The Gulf is pegged to the dollar. You don't have monetary sovereignty. And actually, the dollar is debasing like there's no tomorrow. So you're seeing your national currency to get. So if ever there was a time to orientate towards a more asset-focused, mineral-focused, tangible, real-world economy-focused, now is probably that time. You've got a real-world commodity, oil, which translates into energy, and you've got minerals, and your net solvent creditor countries. So the Gulf is in an extraordinarily successful position, and they're pushing into tech, digital assets, and they're pushing into AI. They have everything that you need to take a lead in this and get the scholars behind it as well. It takes a confluence of a lot of different actors and a lot of different stakeholders. That's probably a bit complicated given the geopolitics of the world right now.
On the last episode, I spoke to somebody about Pakistan. So I don't know if you're aware, but Pakistan is supposed to be going completely interest-free by the end of 2027. And I'll link it in the show notes. But we talked a lot about like the challenges of implementing an interest-free or an Islamic economy, if you want to call it that. And I guess the challenges are institutional coordination and public awareness, as well as among other things.
But listen, I haven't apart from the crypto stuff, which I've touched upon, I haven't focused a lot on Pakistan. When they say interest free, do they mean sincerely interest free, or is it that we bring in a river replication system that nominally is an interest, but actually, in terms of its financial outcomes, it has the identical economic impact as a loan with
Well, yeah,
interest?
that's a good question, right? That's a good question. Is it going to be financial intermediation where it's the same but just with labels? But I guess
Because look,
we'll have to.
I don't think, from what I know of Pakistan, I don't think it's financially or fiscally solvent enough to wean itself off of a fiat system where you need to spend more money than you have. And I don't think they have, and this is my ignorance, so forgive me, large enough stock of natural resources or assets that could help them underpin the Pakistani currency with something tangible. But you need a fluent macro economist on Pakistan to evaluate that. I spent a lot of time in the Gulf. That's why I'm more comfortable and common on the knowledge around the assets and the viability here of a more tangible, solid system in a debasing world. Other countries that are heavily in debt, I'm not sure what the roadmap is.
I think it's different for each country, right? So, like, if you take countries like Afghanistan or Iran and Sudan, Libya, all these countries are going through their own challenges, both internally and externally. And, it doesn't help facilitate a fair system there. But I just want to transition to tech. You've talked a lot about tech, and, there's a lot of hype around AI. In fact, the last AAOIFI conference in November was talking about AI and how AI can play a big role in Islamic finance. Are you of the camp of that AI will help revolutionize Islamic finance, or do you think it's just going to assist things like Sharia governance and fatwas and things like that?
Look, at its minimum, it's a 10x efficiency driver, maybe even a 50x efficiency driver. And that means with the same resources, you can do 5 times, 10 times the amount of work. So does this allow Islamic finance to scale into more countries, more jurisdictions faster, quicker? I think so. But that doesn't, as I said before, I don't think size and scale is the key driver. I think 5 trillion of banking assets and 1 trillion of Sukuk, I think that's enough to make change. Where I think it can really make a difference is in new systems. If you're trying to build a complementary system, a new system, where you simply cannot get scale because of the incumbents, now with 20 people, a bunch of AI agents and some capital, you can probably scale that institution X in a year rather than 10 years. Now, AI is as powerful as its linkages into the real world. Once you start to bring blockchain, Web3, tokenization, smart contracts, and you add an AI, you then start to build entire agentic systems. Now, if a bunch of Sharia sincere capital providers wanted to build a digital system which reflected a different school of thought in Sharia, more asset finance, you can codify anything that looks like riba is prohibited. I don't care. The financial outcomes are measurable. Legal complexity becomes abstracted. It's irrelevant to the outcome. And you can codify and you can build your own mini system. This is why decentralization tech is so important. You don't need to change the world. You just need to build something that works for your community of like-minded people. And if it transpires you've tapped into something that others share, well, then you will grow. As long as your UX, UI is efficient and maybe some gamification and maybe some value and, all those good sort of KPI things. But whereas before a new startup would have zero chance of traction, now you can do it. And the newness of blockchain infrastructure, DLT infrastructure and AI mean there's a lot of ideas, a lot of opportunities, a lot of threats. And that's why I think it's the innovators, Facet, Marhaba, Curate, those who are in the Web 2 world driving more of an investment mindset, because we need to change that mental culture. And those in the Web 3 world who are building the rails, who are building the infrastructure so that investing becomes as easy as buying a can of Coke. It's got to be frictionless. And if it's complicated, your AI agent will ask you 20 questions. Are you a pensioner? Are you young? Do you have lots of money? Do you have kids? Do you have school fees? Are you free? We'll ask you a whole bunch of questions to assess your risk profile. Then it will go on chain and source a portfolio of investments from all of the Sharia compliant investments that are available on chain. You want gold, non-yielding, get that. You want some SME investing, go there. You want some liquidity mining, FX trading, go, and all of the stuff will be available, and it will do it for you while you're sleeping. That's where the future is headed. That's where Islamic finance, instead of trying to copy what everybody else does, there's room for innovators to really make change. And with viral growth, before you know it, you can have 100 million people running this stuff. But it takes a lot of investment. And this is where the venture capital scene is not particularly Ummah aligned, I would say. There's been some very public commentators from top VC firms who have, made statements, which makes it very clear where they stand. And even in a lot of the fundraising meetings I've done with some of the startups I work with, and then some of the side comments are, these guys, how do you know they're not financing terrorism? And all the tropes around the Muslim, Arab sort of community are out there. And most of the capital is in the hands of Series A, Series B money. You need a lot of deep pockets. If you don't sell up or buy into them, do they then turn against you and crush you because you don't have aligned supporters? And it doesn't have to be Muslim. There are parties out there, firms out there that do think about impact, that do have human values, but the due diligencing is quite, invasive. So like now when I've invested, I've actually asked founders about their stance on particular Middle Eastern issue. And because I can't have my money going into a firm where, they share different ideologies. So those values need to come in, but I'm a marginal player, if even marginal in the grand scheme of things. It needs to be Ummah aligned VC firms in the Middle East who are laying down, I would say, guidelines about the sort of firms they'll invest in and what values they expect founders to hold.
Yeah, I was just going to say we dedicated an episode about the whole debacle with Sequoia and Sean Maguire's comments on Zara Mamdani in the show notes, and maybe towards the end of the episode we can talk a little bit about that and your thoughts on that and why that is. But just on this point about AI, I had one person who, during my time in Bahrain in November at the conference, he mentioned to me off the record that AI is a lot of Sharia scholars and people who are involved in Sharia auditing and governance probably won't like AI because, as you've just said, right, it improves the efficiency and transparency of the whole process, auditing, governance, all these kind of things. Do you think that like AI, I don't want to say like AI fatwas or, there were some banks in Bahrain which are testing things like AI fatwas and generating fatwas, but do you think like they pose a threat to Sharia scholars in the sense they might make them obsolete if once the AI gets a lot better? And then also in tandem with that, one banker he did mention to me is that, by going to an AI scholar, if you want to call it that, it might reject some of the things that the banks propose because, if it's strictly by AOIFI criteria, a lot of the transactions would get rejected. Whereas if it's a human involved, it's a lot more subjective.
It's a lot more influenceable.
Influenceable, yeah, there you go.
Look, again, to generalize it, do those with knowledge want mass sharing of that knowledge, right? Does it reduce your influence? Does it reduce your salary? Does it reduce your pay packet? Right. So always look at the incentive. This applies in everything in life. Look at the incentive structures of people giving you opinion. The way I see it, I think that the scholars should form, they have their firms, let them build their own fatwa GPT, which is based on all of their judgments, trainings, etc. There'll still be years of trial periods because a lot of the stuff is, ChatGPT makes stuff up. You've got to be very specific with your prompts and so on. But consider the value of having, your own Sharia AI on your phone and so on. It can help distribute knowledge, which I always think is a good thing. And then for those parties that have the knowledge, you just charge a licensing fee. What is it, OpenAI? What's the valuation of OpenAI right now? I don't even know, right? Could you have $1 billion fatwa starter? If 100 million people download your fatwa GPT, and they're paying you $2 a month.
It's good business.
It's an extraordinary business. So within that tension of knowledge democratization, there's a huge opportunity. So I think the ones that need to worry will be scholars who don't have an awareness or a following. But then once technology empowers you, look, there's one particular scholar who I really like, who's not very public. I don't think he has much of a following in the broader circles, but in the insider circles, he does, right? I would love to amplify him somehow with technology, and so that people could get his views without friction. And then you could have multiple nodes of scholarly knowledge and let them debate each other, right? I mean, it's brilliant. Technology should be seen as an amplification of the knowledge of the scholar, not a replacement. Scholars are a bottleneck, I would say. And also when they participate in so many different institutions, there's a number of conflicts. Whereas this allows maybe newer scholars to get a foothold, maybe younger scholars to get a foothold. So I think AI is amplification. And even look, one of the sort of utopian ideals of Marhaba is even right now, Marhaba has a Sharia governance board of 3 scholars who are overworked and probably overstretched. In a perfect world, we would give 20 scholars like some kind of NFT legitimacy, and every Sharia pronouncement that the community asks for, these 20 scholars would vote. And then that vote would get reflected in the code. So technology doesn't replace them, but what's the mechanism where I can translate a Sharia opinion into code? I need a tool for that. And that's what these tools give you. So the technology literate scholars should be sharing their knowledge online in a structured way. And then eventually that ecosystem would evolve with different scholars as becoming different nodes of knowledge. And together, those nodes can form a consensus of knowledge, which may or may not guide the Ummah.
Yeah.
It's no what we have today, the ulama, but it's a 22nd century version of the ulama.
Yeah, it sounds like what you're saying. They're going to become like in other industries, people are going to become prompt engineers rather than the main drivers of activity. Would you say that's fair?
Which demographic are you referring to?
Well, generally, I think one of the trends with a lot of industries is that people are not necessarily going to get replaced, but they're going to become prompt engineers. So you'll have fewer of them. So do you think that's kind of similar replication here?
So yeah. So look, this is this is the challenge that we're going to have with society as a whole. The good people, the smart people, the hardworking people in this will end up doing very well when they can multiply their effort by 10 or 100. The weaker people, the weaker employees, the weaker leaders will suddenly find their stronger competitors are working 10 times, so it is becoming a bit more Darwinian, I think, in that sense. But the thing is, even with a relatively small amount of knowledge, you can master prompts. You don't have to spend a decade accumulating private equity knowledge, right? If you're a really good prompt engineer, the world of private equity knowledge or angel investing is available to you. So now when I get an investment agreement, I chuck it through ChatGPT, and I've trained it a bit on some of the stuff. And I say, look, you know what I'm like. Can you check this for stuff that I don't, what risks are there? Give me a list and put it in an email. So my investing that was unscalable, I'd reached a limit. I've actually just got a second wind where ChatGPT does my documentation due diligence. And I'm just left with the niyyah of the intention of the founders, the mission, the purpose, and whether I believe in the team, which is a human thing. It can never be replaced. But if you're someone who relies on technical knowledge and the transmission of that, lawyers, accountants, I think all the junior accountants, they're going to struggle in this new world order. How do you get the experience that gives you the EQ to do your job? And that's where, as a society, we really need to think about how young people get educated, get invested. I think there should be a tax on AI and robotics if you want a social stable system. Because if you're going to make half of the population unemployed, all that half of the population are going to do when they get hungry is riot and stress and go after the other half. That's not a world I want to live in. So if you agree in any form of social redistribution, whether it's 2.5% on wealth or whether it's taxation, you've got to factor in as a policymaker the displacement around robotics and AI and bake that in to ensure social stability, or we're heading into a pretty challenging place.
Before we begin the podcast, there's just 2 areas I wanted to ask you about. The first, obviously, is what I just mentioned about Sequoia. being an investor yourself, being involved in venture capital, being in the Islamic markets. Also, you've been in the bank, working in a rating agency, rating all these instruments. On this topic as well, what did you think about the whole debacle with Sequoia, and where it ended up with Sumaya Belbali, who, she's a very fantastic individual based on her credentials, resigned after complaining what happened with Sean Maguire. Do you have any high level thoughts what happened?
Yeah, look, I won't go on specifics, but I think the legend in this space is the WAMDA executive chairman, like Fadi Gandour, right? He is hyper vocal, very lucid, very eloquent. Actually, it was he that put me onto the idea of AI mental colonization, or he called it AI decolonization. When you outsource your thought to an AI as the Ummah, that's actually, so it's a very important point. Sorry to backtrack. The Ummah needs to be, the scholars need to be an AI, because otherwise the influence of models on thinking is going to be more powerful. So there needs to be Ummah native. And there's an AI model recently launched called Thaura, right? Thaura, built by a couple of Syrian guys, I think incubated or supported by Tech for Palestine. They're not there to monetize your data, or they will at some, I mean, they need to find a business model. But the whole intellectual colonization around values, at least there's somebody in the global south part of the world that says, look, we stand for something, and we stand for it so much that we're going to build tools that reflect our values. And I think that's where the commentary from people like Fadi, who's like a legend in the Middle Eastern space, he's like a role model for what I hope all the capital from this region, which is extraordinary, should be allocating capital with values in mind. Otherwise, what sort of a world are we living in, right? And so, the gentleman you mentioned is just the tip, I think, of an iceberg. But these people, I thought there was also another lady that resigned from Microsoft, and so on she spoke out loud at some event and it went viral, her clip. These people should be rewarded for taking a stand by firms in the Middle East, Asia, etc., and given prominent positions to show that being values-based gets you a reward rather than ending your career in your 20s. And then ending your career, or you keep your mouth shut, living in fear. And that's where a lot of people working at institutions can't speak their minds, because their livelihoods, and I completely agree and empathize that if your livelihood, your children's livelihood, if everything depends on this job, are you going to sacrifice that for some people say yes, of course, others would no. It's a personal judgment. And look, none of us are allowed or permitted to judge one another. That's left for, the Almighty alone. But nonetheless, many of us seem quick to judge. So everybody has to make their own personal decisions about how much they're willing to do. But so look, I'm going to do a plug for these guys. Even without trying them, I subscribed, right? I want to support them. It's a useful form of zakat or waqf. From my perspective, if I can support centric AI for our community, I will support, I subscribe with my eyes closed. And I suggest, and everybody that listens to your podcast, go just subscribe, back these guys. If you want the Ummah to have a foot at the table, at the AI table, a seat, sorry, in the AI table.
As we bring the podcast to a close, the other thing I wanted to ask you about, we're in early 2026. How do you see things going in things like crypto and gold? Do you think we're going to reach an all-time high? It seems to, the first only few days, everything's reaching an all-time high.
So look, I think we're reaching a culmination of the fiat debasement system. There's a run to hard assets, which cannot be replicated. I did a post on my LinkedIn. The physical amount of silver is I can't remember the number, but the paper amount of silver is 350 times. Now, that's because 95% are speculators and cash settled and never want the silver. So it works just fine. But unlike gold, silver is an industrial metal. You need it for the green economy. You need it for the AI economy. I think there's a 250,000 ounce deficit. China put on export controls January 1, right? There's no negotiating with physicality. And central banks have already accumulated more gold. I don't know if it's in the last 12 months than since 1981 or something. They've front run the market already. Now, what they've done, the derivatives market has been used to suppress the prices of gold and silver. And I actually don't think we've seen the end of this run. You can't unwind such a Ponzi of paper without massive destabilizations, maybe even systemic risk, financial institutions going under. You have to do it gradually, inject pain gradually. But in Shanghai, physical silver, I think trades at a $2 to $5 premium than comic silver, because there you're going to get the silver. It's got to be physically verified. I think that gap will widen. And I think physical assets, your listeners should be thinking about physical assets. If you're doing ETFs, make sure it's a physical backed ETF, ideally in a neutral jurisdiction. Don't be long cash. Bitcoin obviously comes into that scarcity argument. I am a holder, but I'm equally a holder of gold and silver. So I'm not putting my eggs in one basket. I do think Bitcoin has the potential. All that matters is enough people believe for something to become a medium of exchange. The problem is we're so early. Gold and silver have tens of thousands of years. Bitcoin has tens of thousands of minutes. It's just new. And then there's quantum. But if quantum comes, the entire financial system is at risk, not just Bitcoin. Your digital signature that says you own your house or something, that could be broken and forged and the house doesn't belong to you anymore. So quantum is a much bigger, people always say that as a Bitcoin killer. Quantum can wipe out entire systems of ownership. And if you look at the world today, would there be well-funded actors interested in going into a country, destroying ownership to create social disturbance? It's a pretty tough spot. So looking ahead, I still think commodities. I'm sort of commodities, tech, and some crypto in there as well. And tech-wise, the market's overinflated. It's momentum investing. It's a monetary premium. The stock market has become a hedge against inflation. It's not growth of companies. It's not growth of earnings. It's debasement. I think there will be an unwind coming, and just make sure you have your stop losses in place.
No, I was just going to say the S&P 500. I think, what is it, the Mag 7 or the top 7 companies control something like 40 or 50% of the entire index, whilst the rest of the other 493 companies aren't doing that well. And to me, like the stock market's not always a good indicator of how the actual real economy is doing.
Well, the AI bubble, Michael Burry and his circular narrative, I think, is quite an interesting thesis around how the money's just circulating and everyone getting boosted. AI is once in a lifetime, once in a decade, once in a multi-decade shift, a structural shift in how economies are run, winners and losers. And I think, yes, some institutions will get extraordinarily rich, but I'm not sure what sort of a world that leads us to, which comes us back to Islamic finance. There's got to be more to our systems than just feudalism. We're going back to feudalism, and that's not a pleasant state for 98% of people.
Tell us any projects you're working on, any upcoming projects you're working on.
Honestly, I'm up to a lot of different stuff. The 2 main themes I'm working on is one with an AI firm who have a risk wrapper. I'll do a shameless plug, align.ai. The risk wrapper that they've got works with any open source model, but filters what you put in to the open source model and filters what comes back. So it's like your risk wrapper. It's for enterprise. I'm hoping at some point they'll do a version for retail, because look, I love ChatGPT. I love Perplexity, but I'm very sensitive about the stuff I'm putting in there. And somewhere there's like an AI avatar of Khalid being built up, which is a very dangerous idea. And I would love to have a wrapper that screens all my stuff and protects me from this. So that's a UK business, 60 people. It's a good setup, doing quite well. So there I'm promoting AI governance, just with a broader theme that we need to be thinking about this stuff. So there's the enterprise aspect, but for me, the spin-off is almost into social impact governance, because the spin-off from that tech will protect all of us, not just enterprise. And then on the Marhaba side, Naquib has built one of the most proven, developed Web3 ecosystems of tools There are a bunch of builders who have done fantastic work, and also the scholars there. I spent a lot of time with Mufti Bilal, fantastic guys, and so I do give a lot of my time to them just because of what they're trying to do in the Nia. And I think they offer solutions, viral solutions for potential change. And then my big ticket stuff is working with sovereigns and supranationals around asset tokenization as a way of boosting sovereign wealth at the same time as giving your population a share in the country. So that's my utopia vision. And that one takes a fair amount of time, but it's been ongoing for a few years. The other two are more tactical and more immediate. And then at the same time, I've got all of my ratings advisory clients who luckily my references are immaculate and it's very high leverage with those guys. Yeah, so that's kind of in a nutshell. And then two kids, which is my number one investment. Um a lot of fun, and trying to balance that all means I'm probably look older than I am.
Mashallah, you don't look a day over 30. Before we wrap, are you still Xing, or are you on LinkedIn? What's your mode of
Honestly,
conversation?
I should hire a professional ex manager. Look, I've found on LinkedIn, I've got a following for my weird idiosyncratic form of long form narrative, which is it's heavy reading. It's not for everyone. So I'm kind of surprised. I just crossed 15,000 followers. And, I've written about stuff from, politics to AI to Islamic finance to ratings. It's a bit of a there is a bit of a theme through it. The long form is not for everyone, but I guess there is a following here and there. So yeah, LinkedIn is where I post, and I try to do bite-sized versions for Twitter, but I think I need to hire a professional manager because I just don't have any bandwidth for this stuff anymore. Yeah, LinkedIn is where I do most of my knowledge sharing.
Yeah, I really like your LinkedIn posts. I think like you stand for what you say. Like you don't just sugarcoat it. You say what you really mean, and you mean what you really say. So I'm really grateful for that. But Khalid Howladar, this has been a really great conversation, great catch up on all the different things. I was really fascinated to hear about your views on VC and AI as well. But maybe we need to do a part 3 sometime later this year. But yeah, have a great rest of the 2026, and we'll speak soon, inshallah.
Inshallah, man. Take care.
Take care. Assalamu alaikum.